All right. So we're going to try and predict where market wants to go, right? With our range imbalances. So the first thing you want to know is what a lower low is and what a higher high is, right? So a lower low is when these two candles, basically the premise, these two candles don't go below this low, so this would be your lower low. And vice versa, where these two candles don't go above this high. So this would be your high, this would be your low. These candles don't have to be bearish, or these candles don't have to be bullish. They could be all green candles or all red candles. But this would be your lowest low. This would be your higher high, right? So right here, this would be your lower low. This would be your higher high. And we're trying to find this range imbalance and our OTE zone. So we take our fib from the lowest low of the wick. So there will be a wick here. And then there will be a wick here. So what you do is you take your fib from the wick to the wick. And this would be your OTE. Where you want price to go to. Where your draw on liquidity is. So this is your OTE. Right? Now, you know a range is imbalanced if the range doesn't already go back 50% and touch your 0.618. So this would be a balanced range. Here, this would be a balanced range. You could try to target like a smaller imbalance right here, but it wouldn't make sense. But yeah, this would be a balanced range. Right? So we're looking for our imbalanced range and our OTE. So we could look for market to come back down and basically tap it. You could take buys and continue up. And then if you have another imbalanced range down here, let's say there's another imbalanced range down here, and we have our OTE like right here or something. Right? You wouldn't want to see market come back down again after it takes like some type of liquidity. So it takes these highs. So it grabbed more liquidity, but it needs more to go back up. So it'll go back down, get a pullback basically. Tap our OTE, and then go back up again. Right? That's basically what we're looking for. Yeah, that's basically the whole premise, how you want to predict market. That's how I've been able to find my bias and predict market these past few this whole month actually. So yeah, so we'll go over Friday and how I drew my fibs. So we have a small imbalance here from this low to this high, right? So you draw it wick to wick, and your OTE zone would be there, right here. Boom, right? Taps, guess what it does? Market took or was generating liquidity off a off this 1 hour gap that was around this area. There was a 1 hour gap. Let me switch. Let's go back and forth. Okay. Yay. Okay. So basically, market was. Get rid of this. Basically, market was taking this whole gap, and then it struggled. So this was our draw on liquidity. Was this 1 hour gap? Took it. And then we go back. So it took that 1 hour gap with these highs, and then it started consolidating at this zone. Now, you could entry off this high to this low, right? Your entry is right here for shorts. And where do you want market to tap? Your imbalanced range, which would be this tiny range here. So it'll bounce off that. And basically, what it did was first, here's what market did. I'm gonna draw it. So here's the highest high. It goes down, right? Not able to take any liquidity. It generates these wicks, generates people to go for sells at this zone or this area, but then it goes back up to take those out, right? So what it did was go down, go back to our OTE, which would be here for sells. So you would take your short here, and then it goes all the way down to our next OTE zone, which is where you will get out and go for buys, right? And probably to the OTE of this range or 200 points. So like OTE be like right here, but sometimes it'll go for buy side liquidity, which it did. These Asia highs, and there was a 30-minute buy side far back that I marked out. I could show you real quick. I might have deleted it, but we'll go look. What the heck? Oh yeah, I deleted it, but there was buy side right here somewhere. But yeah, go back here. Now, so we have our bounce, our ping pong, right? Bounces off our OTE range, and that's how you predict. That's how you would have predicted today's market, right? Now, after it takes buy side, which it did, let's say it's like right here. The next zone it wants would be our next OTE range would be this one. So from this lower low right here, and I did it to the whole range. So to this higher high right here. You could even do it here if you want. This higher high. But yeah. And then your OTE range would be right here. We mark that out. And what does the market do? So following this, we go down. People go into sells here, but then they get taken out with this pullback, which would be here. So you enter shorts at that wick to go to our OTE zone, which would be here for buys, right? And then you get out at the OTE zone, which would be like this wick, right? That's our next OTE zone. So if you like did this to this, boom, that's our next OTE zone. Now you can get out there, or you can have a runner to buy side, which usually Asia and London, it'll like continue where it wants to go. But you want to be safe and take the 200 ticks. But yeah, so you did take it to buy side. There you go. This is the buy side that it takes, or fake sweeps, right? Now, with New York open, what you want it to do is take out Asia highs, okay? And then we have, let's say, this is London, or no, this is also Asia, right? And then down here would be London lows. And then In this case, London highs would be right here. Okay. So based on where our buy side liquidity is, our buy side was all the way up here somewhere, like super high up. Right. Why does it keep on? Let me save this real quick. Okay. So we have a 1 hour gap up here, right? So it could go up there if it wants, or our buy sides are all the way up here, right? This whole chart that I have right here is in the chat. If you want to look at it, I marked out all the 1 hour gaps and all the 1 hour buy side and sell sides for you guys. So you don't have to. You just open it up and then it'll be there for you. Now, back to here. So basically, like I said, the 1 hour gaps are super high up, and basically, I don't think it would go up there unless we're in a continuation profile, which we weren't. And you'll see why I deduced that it wouldn't be. Okay, so we fake buy side here. We get a little pullback. This is not into any OTE zone. It's just making another range right about here. Right? This is this pullback. Let's make this like this. This is that pullback. Now, New York Open manipulates. It takes out, with this wick, it takes out London highs, but not really. It's like a fake sweep. This is what I considered it at the time. This is a fake sweep. And then it fake sweeps, or it real sweeps the buy side and Asia highs, right? So we have Asia highs that are taken out. We have London highs that are fake, that got fake sweeped, right? With these lows, and it also fake sweep these lows. So what I'm looking for is sells, right? So you just wait. You wait for this pullback, right? You could have probably got in. You could have got in these sells right here for this to target a midnight open if you wanted to. But I was waiting for it to take buy side, which was around here. Let's say around here's buy side, right? So it takes buy side, it struggles. So what I do is I look for shorts, and if I lose this, it's only like 250. But that's with risk management, right? And it was 50 ticks, and I got in at like this high, like that. That was exactly what I had it at, and then I was targeting OTE. Okay, now basically, here's what I did. Market opens. Let's do a little split right here, and let's mark this as black. So basically, this is the pullback. 9:30. What does it do? It takes out. It wakes up here, right, into our OT zone, and then it takes out London lows or London highs, barely, and then we get buy side taken, right? So what I'm looking for is the reversal, New York reversal, and I'll pull that up like always. I'll pull it up, the little thing we follow. We're looking at a New York reversal here. If not, we're looking for a New York continuation. One of these two, right? We don't want these because we don't make any money, right? So I'm willing to risk that we're gonna go lower. And plus, we have our OTE zone down here that we haven't cleared. So I'm gonna remove this one because we already tapped it. So here's our next OTE zone that we need market to tap, right? So that's my draw on liquidity right here, this imbalance. Okay. What does market do? Takes buy side liquidity. It's technically it's a fake sweep because it doesn't continue. So it takes buy side to go lower to London lows and to our OTE range. Boom. Now from this OTE range, you could take buys. This, and we'll just do that. Making like a mini model for you guys. Right. So there you go. Boom. And then you take buys. Right here. And it would be to, this one would be to midnight open, which would be like right there. Or you could have just held it all day if you wanted to. Or you could take it to our next OTE zone, which would be here. And how to find that one? You would go from this high to this low right here. And our OTE zone right here to the wick. And then you could have took sells if you wanted to, if you want. But basically, you would take it to that OTE zone, which would be like right here. And that's what it did. Boom. And boom. This was our low. I called it. This is our low of the day. And this would be our high of the day. Right? But, yeah. So that's basically it. Condensed down how today went. Right? Now, let's go back and look. So our OTE zone right here, we want this to get tapped. Gets tapped to the wick. Bounces off. And that's how that works. Mini model here, right? So that's us predicting the market. We could probably do it here too. Let's see if we can or not. Just hard to go back in time, right? So we have this range, we have this range, we have this range, or we have the whole range. We could take this whole range if we want. Let's see if this OTE zone gets hit. I believe I ping-ponged this market too. Yes. So this whole range imbalance, all it's doing is stepping down, but it's not going to our OTE or our basically our halfway point of this push. So here's our OTE. What does it do? It takes buy side, rallies down, pulls back. This is our entry right here, or this is our entry right here. Goes down, taps our OTE, bounces off. Where does it go? It goes to our next OTE range, which would be probably right here somewhere. Right here. So you could take sells here. Goes back to our other OTE's range right here. You could take buys. And then so on and so forth. And then New York Open. What does it do? New York Open here, it takes out both London high or lows and highs, Asia highs right here. Boom, boom. So you wouldn't expect market to go any lower than this. Why? Because our buy side is our target, right? Our main target, right? And you see these huge wicks. That's because there's an order block that was made here, order block made here. So that's why it doesn't go any lower, technically, right? This order block right here, or that order block over here. But you also got to remember 930 is our manipulation, right? You could also took I believe this range, and you could have entered off this wick from this low to around this high, I believe. You got an entry here, or you got a re-entry here somewhere. Actually, it would be most likely. Okay, this whenever price action is like super gappy, it's kind of hard to find your range. So, but yeah, here's your entry here actually, right here, or you could take London if you want to. Boom, here's your entry around here. Right. But, anyways, that's besides the point. You can basically predict where market will bounce off with range of balances, right? And you could take buys off this, right? But like I said, it took buy side here, intermediate, which would be, or intermediate, which would be here. Intraday. Holy gaps. Yeah, so it might be hard to find our OT range, but from this high probably to this low, and your entries here for sells to our OTE range down here, right? So that's how you find your ranges, and that's how I look at how market moves, right? Right? Market will pull back, rebalance, shoot back up. If not, continue to buy side. If not, it'll go to OTE range of this, and then go back down to sell side or another OTE range, and then go up or continue up. But yeah, that's how I view how a market moves. And that's how I capitalize off this and plan to ping pong market. Now, like I said, you want to know what a higher high and a lower low is. That way you could find out how to make your range, right? So if you zoom out or even go to a line chart, right? Look at these where these points are. You would make your range from here to here, or you can make a smaller range from here to here, or this range here to here, right? Because there's an imbalance here. There's an imbalance here. There's no pullback to 50% with this pullback. It doesn't go back to 50%. So technically this whole range is imbalanced from here to here, right? Oh, my bad. I was doing something. But yeah, basically, if you look at the line chart, same thing went over here. We have a huge imbalance here with this push up. Doesn't get a pullback into 50%. So you could take your range from here to here, or here to here, or here to all the way to side, because it never gets a pullback to 50%, right? The only time we get a pullback is with this sell down towards it. Then it bounce off, and it continues. This is a New York continuation because it already took out London lows and Asia highs. But yeah, that's how you find your ranges, and that's how you predict market, or that's how I predict market at least. You'll get to this point eventually, once you know how to mark out your ranges and your OTE zones. But let me go ahead and go back to candles. But yeah, that's basically it from me. Yeah, nothing else really. Quick video, quick explanation, how to find your ranges and how to predict market.